Madison Air isn't a household name, but it sits underneath some of the biggest themes in the market right now, and it's officially public. Joining us now is Jill Wyant, CEO of Madison Air. Jill, congratulations. Thanks so much for being here.
Thank you. Thank you for having me. So proud of our team. Big day.
Yeah, big day. Madison Air trading under the ticker symbol MAIR. For investors who don't know the name, give us a quick overview. What do they need to know? Why is this important right now?
Well, very few people think about air, but we take up to 25,000 breaths a day, spend upwards of 90% of our time indoors, where the air can be up to 5 times more polluted than the air we breathe outside. So while most of the world overlooks air, at Madison Air, we see it very differently. So we bring highly engineered custom air quality solutions to commercial and residential markets that are driven by high performance needs, from hospitals to data centers to advanced manufacturing environments to healthy homes. We are really everywhere air drives performance, productivity, reliability, and human health.
So my mind initially goes to data centers when I hear air, even though air is involved in so many other facets of life. But tell us, where is the strongest demand right now?
Yeah, so I'd frame it a little bit differently. We have a commercial segment. The company's organized into 2 segments. Commercial is about 2/3 of sales, about $2.2 billion in 2025. And there we really are around a diverse, more than 15 end market verticals where air impacts the customer success. So data centers is one of them. By virtue of it's about 20% of the commercial segment sales, but we provide highly engineered air quality solutions to pharmaceutical manufacturing sites, semiconductor chip fabs, complex manufacturing and logistics environment, and the like. So that segment grew 17% last year as a focus, as a result of that very balanced growth across 15 end market verticals.
Where do you think you'll see continued growth? And if we were talking next year, what do you think the strongest segments would be?
I mean, so one of the great things of our business, we have an 8% share in a $40 billion market. And the markets we serve are really underpinned by strong secular tailwinds. So AI and compute is, of course, one, but rising demands for energy efficiency, aging buildings, both commercially and residentially. So we see lots of opportunity across a balanced set of markets.
How much of your growth is tied to AI and efficiency versus just where we are in the economic cycle?
Well, I would say, I mean, clearly the data center, end market is benefiting from where we are in the AI cycle. I would say more broadly, I mean, the economy is not great, which is why the company grew 12% last year. If you parse that into our segments, our commercial segment grew 17% last year, and even without data center performance, that was high single digit. So we really attribute that to 3 things. First, we're differentiated by return on air. We sell highly custom solutions in high performance markets where air is critical to the customer's success, and what we do helps power better business outcomes for our customers. As you're asking, we lead in growth markets. Data centers is one of them, but so is manufacturing, logistics, clean rooms, and the like. And last but not least, we think we are very differentiated by a unique value creation model. So mission-driven company, highly decentralized, so that we are focused on the customer, and very lean at the center. We think that will allow us to really have outperformance relative to large and small peers over time.
It's interesting because you say the economy isn't great. So I'm curious about what you're actually seeing on the ground. Are your customers actually accelerating builds right now, or are you finding that they're more cautious right now?
Well, I would say a lot of our growth is rooted in the fact that we have tripled our total addressable market in the last 3 years. So we have not waited for GDP to improve. We never do. I think like any great growth company, we are all about expanding the size of our opportunity. And we are we have our portfolio really pointed in the right places. So we've expanded into data centers, as you've talked about, into clean rooms, life sciences, biologics, and the like. So it's really, we see very, very good growth if your portfolio is pointed to the right end markets, which we've worked very diligently to do.
Digging into data centers just a bit, do you find that those customers are designing for long-term demand or a bit more short-term, because everything is changing so fast?
Yeah.
And, the technology alone is changing so fast.
Well, we really, I think by virtue of who we serve the largest hyperscalers and a subset of the co-locators that serve those hyperscalers. So we are in pursuit of very resilient demand. And those customers, to your point, are really looking at not only the data centers that will be built this year, but the rack of the future, 5 years down the road, 10 years down the road. And so the real differentiator for us in the data center space, beyond the fact that we have a full array of air liquid, and hybrid cooling solutions is we are custom. So we are across the table from the customer at the design table, helping them solve their ambition to achieve max compute at lowest net impact. So we're excited about data centers, but again, as one of 15 verticals that we grow and cultivate.
If energy prices stay elevated, how does that impact your business?
Our customers need us more than ever when energy is high. So
why is that?
Because so for example, 40% of the cost of operating a data center is cooling, powering the cooling. Energy is key in ventilating these spaces, and so when we bring custom design technology that is designed to use the least amount of water and the lowest amount of electricity, we call that return on air. And so in a challenging world where inflation is rampant, that custom solution that we design precisely to their needs ultimately is a big piece of helping them lower their energy bills.
So for the investors who are watching and considering investing in air, what's one thing they should focus on getting right?
Well, I think for us, it's the balanced set of markets that we sell into, residential markets where we are not in traditional HVAC. Instead, we are in all of the elements of healthy air at home. And then from a commercial perspective, good end market growth that's diversified. We're not a data center pure play. So if you are looking for exposure to a unique custom set of solutions across commercial and residential markets, I think Madison Air is a very investable stock to put your money in.
Who are your biggest competitors?
Well, I would say the competitive landscape, you mean in terms of comps or end market competition?
Both.
Yeah, so we don't have a perfect comp, but the ones that typically, I think the best proxies are Trane and SPS Technologies. The thing I would leave you with there is we are a $40 billion TAM, which is really separate and distinct from traditional HVAC. And so while a lot of those players scale manufacturing and are very, very good at it, we really scale custom design. And so we design directly to meet the customer's needs. We're better by design as a result, and we're really good at scaling customer design and delivering superior customer impact.
All right, and just finally have to ask you about timing, of course, with any IPO. Why now, especially given, the market's at all-time highs, but investors are a bit more selective right now, it seems.
Yeah. So for us, the why, the why underlying our IPO is really access to a permanent capital structure that the public markets provide that will allow us to continue investing and growing and scaling our mission to make the world safer, healthier, and more productive. And I really believe that it's also a function of the company we've built. Our team, our brands, our performance, and our momentum, strong growth momentum. And so, and it is, certainly I always talk in terms of why now, as in literally in this moment with the amount of volatility that's happening in the macro economy. I talk currents and waves. So the waves are choppy, right? Everybody's getting a little water splashed in the boat, but when you think about the currents underlying Madison Air's opportunity, strong, durable trends, growing end markets where air is essential to operating in those environments, and real durability across economic cycles. So we're looking to, for more investors to join us on this journey to build a remarkable business that we believe should outperform across economic cycles.
And just finally, what's one area that we'd be surprised to know how important air is? Because data centers immediately comes to mind. You mentioned hospitals. What's an area that we might not realize?
Yeah, in your own home. So for decades now, homes have been built, really for energy efficiency. And while that's great, it typically has come at the expense of the quality of the air in your home. So if you're not properly ventilating your home, the air in your home can be 2 to 3 years old. That can exacerbate allergy issues. It can make it an uncomfortable environment in which you're living. And in an era when we're all spending so much time at home, home preservation priorities are critical for consumers. So I think that really with the awareness around sleep and fitness and what we're eating, people should prioritize the air they're breathing. It has a direct impact on health, comfort, and preservation of your home.
Yeah, and certainly not something that we
Even think about.
Yeah, so
just by taking 25,000 breaths a day.
Interesting. Well, Jill, thank you so much for shedding some light on the space, and congratulations again. Exciting day for you. As we said, Madison Air, trading under the ticker symbol MAIR. That's Jill Wyant, CEO of Madison Air.